Today, Bitcoin ends the week back above $23,000. FTX reportedly opposes a new bankruptcy investigation, and Zain Jaffer of Zain Ventures weighs in on what's driving crypto's recent rally. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices are mixed to end the week. As of noon Eastern, Bitcoin traded higher over the $23,000 mark the morning after it was revealed that GDP rose more than expected in the fourth quarter despite looming recession fears. Ether, however, dipped more than 1% but still traded above the $1,500 level, and the Matic token soared more than 7%, trading at $1.18. Bitcoin and Polygon are much higher for the week, with the most popular cryptocurrency seeing 4 straight weeks of gains after increasing nearly 14% last week. Ether, meanwhile, on pace for its first negative week in 4. All right, let's talk about those top stories. First, FTX is objecting to a Department of Justice request for an independent investigation into the crypto exchange's collapse. That's according to Reuters, which cited a court filing. FTX reportedly pointed to the investigation the company is already conducting as a reason for the rejection, saying in the filing that the DOJ's proposed review would only add cost and delays to its case. As part of its own investigation, Reuters is reporting that FTX asked for help from the judge who's overseeing the bankruptcy proceedings to secure documents from Sam Bankman-Fried, members of his family, and other insiders with information about the transactions that allegedly used stolen funds. FTX is also seeking information about political donations connected to SBF, asking questions about a political action committee founded by his mother and an advocacy organization founded by the disgraced former crypto exec and his brother. According to this court document filed on Wednesday, FTX lawyers say SBF's mother and brother are not cooperating with the investigation. Oh, and one last point on FTX. Lawyers for the company just released a new filing on that 116-page document we told you about yesterday, which listed a number of companies with connections to the firm. We mentioned that the documents didn't make clear how much exposure these companies had to FTX, and company lawyers clarified that being included in this list doesn't necessarily mean that a party was a creditor, but that the entities were on FTX's books and records. Next, Senator Ted Cruz is pushing for crypto on Capitol Hill, reintroducing a resolution that would allow vending machines at the Capitol complex to accept digital assets as payments. The crypto supporter reintroduced the Accept resolution this week, which would require the architect of the Capitol, the Secretary of the Senate, and the Chief Administrative Officer of the House of Representatives to encourage Capitol gift shops to allow for crypto payments and to work with vendors who accept it for food and vending machine purchases. According to the senator, this would benefit foreign tourists because they wouldn't need to pay those high currency exchange fees. In a statement, Cruz said he's pushing for this partly because crypto is, quote, increasingly being used as a secure form of payment for goods and services. Now, American tourists would still be required to pay taxes on those transactions, upwards of 30%. Last, the Federal Reserve just rejected Custodia Bank's application to be supervised by the U.S. Central Bank. The Fed cited safety risks as a reason for the rejection. Specifically, the central bank argued that the crypto-focused firm, which is based in Wyoming, lacked a sufficient risk management framework to address things like crypto's potential use in money laundering and terrorist financing activities. On top of denying Custodia Bank's application, the Fed also clarified that banks supervised by the agency, with or without deposit insurance, are subject to the same limitations on activities, including those related to crypto. All right, let's turn back to markets for our main story. The price of Bitcoin surged to its highest level in more than 5 months this week. So what's driving the rally back above levels not seen since FTX's collapse back in November? I spoke with Zain Jaffer, the CEO of Zain Ventures, which invests in tech startups, about how institutional investors are contributing to crypto prices. Take a listen.
All right, so we've seen this recent upswing in Bitcoin and other cryptocurrencies in recent weeks, despite some of the bounces up and down. It has been a relatively positive uptrend. Can you talk about what's driving that sort of upward momentum and whether it can withstand some of the bad news that's still ahead?
Jordan, let's first start by talking about the bad news. I'm puzzled, aren't you? Crypto should not be rallying when you've had so much backdrop of bad news. You've got the SEC here filing lawsuits, 30 cases last year with huge fines. We're talking millions or tens of millions of dollars. The DOJ is out arresting everyone. Recently, a Russian national living in China was arrested, the CEO and founder of Bitslato. And then there are crypto layoffs throughout the entire sector. We're not talking about tech layoffs where you see giant tech companies laying off 5%, 6% of the workforce. Luno, which is owned by DCG, just recently laid off 35%. Genesis at 30% and Silvergate at 40%. We've had 27,000 jobs laid off since April last year, according to CoinDesk. So this is a lot of bad news, and it's about to get worse in my view. You've got some major bankruptcies that we've seen, but the spotlight now is potentially on DCG and Genesis. And DCG, as people may know, owns Grayscale. And if the contagion spreads, you've got 600,000 plus potential Bitcoin that they hold that they may need to potentially liquidate. So a lot of bad news. It's very hard to make sense of this. But if you look at why crypto's rallying amidst this bad news, I think it comes down to two things really. And the obvious interpretation is, look, it's tactical. It's been a good start to the year. All assets are up. They're finally behaving the way you expect them to behave, because we've had a very weird period the last few years with assets not correlating the way you expect them to. But you could say the market's reacting to interest rate expectations, and bizarrely that means cutting interest rates because we're going to have a weaker economy. So when you look at crypto, and let's take Bitcoin as an example, there's some correlation to the S&P 500, gold, and even the NASDAQ. It's up 40% year to date. We're looking at, the S&P at 6%, gold at 6%. So not that much correlation, but some. Where things get really interesting, though, in my view, is the story that crypto is full of speculators. And when you look at an index, and I'm an investor in ARK, Kathy Woods, her fund is up 26% year to date. And Bitcoin's up 40%. So there seems to be an obvious correlation here where crypto is correlated to high-tech growth. And maybe the argument is that speculators are finally back.
So let's talk about what type of investor is here. You mentioned speculators, but I want to ask about the size of the investor, because you also mentioned a lot of macro trends that are driving crypto prices right now. And if I'm looking at that, maybe my first instinct is to say it's the institutional investor that's coming in and buying crypto right now. And maybe retail investors aren't quite, haven't decided to come back to the crypto market. What's your take on that? Who is it that's buying up this crypto right now?
I think that's very accurate. And the reason crypto has wiped out a lot of retail investors, and there's proof of this, the volumes are down 31% year over year. So it's pretty thin trading volumes right now. A lot of retail investors, because of the fact it's unregulated, had access to crazy amounts of leverage. I personally know so many people who levered up to their necks. And anytime you're in a bull market, you can make quick money. But people get a bit greedy, and everyone going into any type of investment security is at risk of being wiped out. And I've seen a lot of retail investors turn very sour. To my surprise, even the most hardcore of crypto fans that I've known since it began are now capitulating, and they are tapping out. So I do think the retail base is getting tired. And when the Fed was printing so much money, that money had to go somewhere. And it was going to all the asset classes you expect, especially with high growth. And so when you take a step back and you consider who are the people behind crypto, at least in the past, when you look at the fact that generally, when you look at principles of wealth management, you're supposed to put some of your portfolio in fixed income, some of it in stocks. You're supposed to have a diversified portfolio. Gen Z, millennials, we don't want to hear that. People want to just go all in on high-tech growth, and crypto's part of that too. And I think that's a mistake that a lot of the people who have been in this bull market are now feeling. What happens when you enter a recession? What happens when you see huge declines in your value? And if you've used leverage, you can be completely wiped out. So I think that's a good argument. I do think institutions are coming in and are stepping in, and there's a lot of arbitrage opportunities. But the future looks very uncertain as to where things are going to go.
So let's pivot to the future and talk about it a little bit. If we're talking about all of this bad news that you mentioned at the beginning of this conversation, what should investors be watching in the coming weeks and months that could have a negative effect on crypto markets and potentially investor sentiment?
In the short term, there's going to be possibly more negativity. I mean, you could say it's extremely bullish that Bitcoin's rallying despite this backdrop of bad news. But I think what's really happening here is that the washout that we're seeing is actually really good for the long-term fundamentals of Bitcoin and of crypto itself. By the washout, I mean, let me quote Senator Elizabeth Warren, for example. Okay, here's how she describes crypto: full of junk tokens and unregistered securities, rug pulls and Ponzi schemes, pump and dumps, money laundering, and sanctions evasion. When you put it that way, crypto sounds pretty scary. And so a lot of the people that see the bad news coming really relates to a lot of regulation. As I mentioned, DOJ is stepping in, arresting people. You've got the SEC filing lawsuits. People are trying to figure out, are cryptos commodities? Are they securities? Are they going to be regulated? Here's the good news. If there is more regulation, if there's more clarity, Wall Street will come in. And we need Wall Street to come in so that we can start to see some real infrastructure being built out. Today, 80% of central banks are considering a central bank digital currency. Every major bank out there, Goldman and JP Morgan, they've recently announced big blockchain initiatives. There's a real use case. One of your guests recently even mentioned that crypto and blockchain shouldn't be decoupled. Both of them are very important. So there's a lot of good news that's going to come, but it's going to be perceived as bad news in the short term. And that's really our view here. And I say our view from a Western perspective. We overreact to any news that involves the US governments, but crypto is much larger than that. It's decentralized. There are people all around the world who actually want to see crypto succeed, despite perceptions that the US government's against it, because some people are stuck in dictatorships where they can't even get the money out. And inflation in some countries, we're looking at 60%. Interest rates also very, very high. What we're dealing with here is a walk in the park in the grand scheme of things.
All right, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.